All right, hello, good morning, everybody. It is August 14th, 2023, 9:21 a.m. We are starting off the second week of August? No, third week of August. We're in the third week of August. We got 2 more weeks left, and then we're in September, and we are beginning the fall, the best time of the year. Leave in the chat what you think the best time of the year is. It's obviously the fall. So if you say the winter, the spring, the summer, you're wrong. You know you're wrong, but it's okay. It is obviously autumn. You got Halloween. You got Thanksgiving. You've got warm hoodie weather, but it's kind of chilly. It's a beautiful, beautiful time of the year. Now, speaking of the weather changing, the AC in my house is dead. I don't know what happened, but it's not working anymore. So there is a fan in the background, which is why you're seeing my wind, which is why you're seeing my hair be all majestic right now in the morning. Hope you guys enjoy it. Let me know if there is too much background noise. I put it on low. If I don't have it on, I'm literally going to be dying in sweat in the suit. So I need something on. So let me know if you guys hear anything in the background and if it's annoying, and I'll see what I can do. But the AC is officially dead in my house. We have 2 weeks left of summer, and the AC died. So it is what it is. We got to deal with it. 93 TMC, Ernest, Gators, Julian, Stevie Stone, Julio, Kevin Smith, Monday morning. Yes, George, Ty, Eeyore was right. John, Steven, Sethy, Roth, Doug C, Benny, Can Man, Monty, Jared, Mattis, Jason, David, Paul, Ricardo. Admit you're late. Wake up, Roaster. I'm sorry. I'm here. Miyoko, Mattis, Dante, John Lob, Zoe Cole, Doug C, Raul. Good morning to everybody that is here. We have a new PayPal CEO. Okay, that's breaking news. I was going to start off with oil prices because I think that's important, but we have a new PayPal CEO. That's more important news. What do we have? Okay, Intuit's Alex Chriss is named the PayPal CEO. You guys said no noise. Okay, perfect. That's great. No noise. So Intuit's Alex Chriss is named new PayPal CEO. All right, I'm going to tweet that real quick. So you guys are going to see me tweet breaking news in real time. Breaking. Boom. Intuit's Alex Chriss named new PayPal CEO. Wow. Okay, so who is this guy? Who is this guy? Let's find a picture of it. Alex Chriss. Anyone know this guy? Is he interesting? Is he an important person? Intuit, Alex Chriss from Intuit. Okay, so I'm looking at him right now. Let's look at what this guy looks like. Is this the dude? Yeah, this is the guy. Do we trust this guy as the CEO? I know we're not supposed to judge a book by its cover, but all right, buddy. You're the guy. Make sure my option spreads can stop bleeding because I trusted you. All right, I trusted PayPal at least, and didn't really get what we wanted. Yeah, I'm gonna share this here, and then I'm gonna tweet this. Okay, so this is who we have. Intuit's Alex Chriss. Now let me look at his LinkedIn real quick. Who was this guy? And then we'll get into oil prices because we got a lot to talk about when it comes to oil. Alex Chriss, Intuit. He is his LinkedIn shows that he was the VP and general manager of small business and self-employed group at Intuit. He's been at Intuit for 19 years. Wow. Okay, let's take a look at PayPal stock while we're sharing this. So the guy seems kind of legit. Let's at least see what the stock is doing right now. Sounds like he handled a big acquisition for Intuit, but I don't know anything else about him. Okay, interesting. Let's open up Webull. Let's see if the stock is moving on any of this news. This is interesting. I actually don't know who this guy is at all, to be honest. His hair is too neat. Can't trust the guy. Okay, let me pull it up right here since Webull is loading. There you go. There's Webull. All right. So here we go. This is what we got. We've got PayPal after hours or pre-market. It's up 2%. Okay, so for this new guy, we get 2% in the pre-market. You got S&P at 445 or 441. SoFi's down, Meta's down, Snowflake's down. So the entire market is down right now. And I wanted to talk about why the market was down. I was reading some good stuff this morning on what's going on with oil prices. We're going to watch a clip in a little bit. The issue that's going on with oil prices right now, it's really interesting. Right now, the world is demanding 103 million barrels of oil, and we are only supplying 101. So we are running at a 2 million oil barrel deficit. Now, why does this matter? Well, this really matters because if we have a deficit, prices are going to have to go up, right? Basic supply and demand. You have more demand, less supply. Prices are going to go up. And as a result of prices going up, what's going to be really not the best thing in the world is either we're going to have to take money from the strategic oil reserves, which Biden has not done. We haven't even filled up our strategic oil reserves, which has been an issue. Or we're going to have to convince Iran or Venezuela to start putting out more oil. And we really don't want to convince Venezuela or Iran, given we don't like any of those two and what they're doing right now, to put out oil. Now, we'll put up with Saudi Arabia, but for some reason, the Saudis are not playing game with the United States. I mean, the Saudis right now do not care at all about what's going on in the United States, and they're unwilling to let oil be adjusted until we get oil to about $90 to $100. At least that's what I was listening to this morning. Palantir now at $15.22. So it's going to be really interesting to see what happens in regards to oil, because excluding housing, inflation is under 2%. If you look at Truflation, we were at 2.1% over the weekend. We are now up at 2.43. Oil and energy is a big reason for why it's continuing to push up. And so if we can't get oil under control over the next couple months and oil is up at 100, getting inflation to that 2% target, or even 2.4, something that's like a reasonable level where we would want to see, inflation getting to, it's going to be harder than most people think. And so that's one of those things I think that's really, really important to kind of look out for and remember a little bit more. So that's what we have going on oil. And then we're going to watch a little bit more on that and see kind of what's going on from that perspective. We got 3 minutes until the market opens. Let's get into a couple of other things. Let me pull this up right here. Okay, we got SoFi at 865, 852, Meta at 301, Snowflake at 153. Apple also is dipping this morning. We got Apple at 176, I believe. Where are we at on Apple? 177. Okay, so we're basically flat in the morning. Apple at 177. A new article Steven just published came out saying besides the revenue growth, continue to buy Apple. It's going to be really interesting to see kind of what happens over the next couple of quarters, especially because the Apple Watch is getting its 10-year anniversary rebrand. It's going to be called Apple Watch X, and that's coming out, I believe, in September, along with the iPhones. By the way, are you upgrading to an iPhone? Look, I was thinking about it. I'm probably not going to do it because I still don't see the need to, but I've had this iPhone for 3 years. I am starting to see the iPhone start to slow down just a little bit more, to the point where I'm like, it wouldn't be the worst thing in the world to get a brand new phone, but dishing out $1,000 for it, I don't know if that's the smartest thing in the world to do. At least not in this economy, not right now. Chris is the president of QuickBooks. QuickBooks is very sticky. Yeah, I mean, the guy looks like he has a lot of experience. That is 1,000% sure. Jeremy, good morning. Thank you for being here. Intuit is going crazy over the last 5 years. Let's go to Intuit stock as well. We have about 30 seconds until the market open. Intuit, INTU. Let's look at them over the last 5 years. Yeah, I mean, they haven't done too bad. Basically a double over the last 5 years. They got to 700 at one point during the bubble. Look at that. They went from 200 to 700 during the bubble. Goodness gracious, that is crazy. All right, so it looks like they're picking up a genuine leader and someone who actually knows what the hell he's doing. This should be good news for PayPal. I mean, this should definitely bring some stability to the stock as we get closer into the new year. All right, 9:30 a.m., August 14, 2023. We have 2 more weeks left in August. The stock market is now open. Wake your ass up. Here we go. PayPal at $62 opens up 1.1% up in the morning. Apple flat for the day, but opening up green. Intuit down just a little bit at 496. S&P at 444. Accelera 570. Coinbase $80. This one has fallen a decent amount since its highs of around 109. SoFi 853. We talked about this on SoFi Weekly. It is getting hammered, and the reason it's getting hammered is primarily because I believe the big banks want their shares. If you look at their 13Fs and 13Gs, JPM is acquiring, Citibank is acquiring. All the big bad boys are acquiring SoFi right now. They have price targets at 16. You just got to be patient on SoFi. You really just got to be patient. The move upwards will be as violent as the move downwards. It's just going to take some time. Meta at $300, Snowflake at 151, Ginkgo Bioworks 180, Palantir $15.18. Palantir has been stuck within the 15 to 1560 range. It fell below 15 at one point, but easily got recovered. So now we're at 1519. I expect it to kind of be here during the week. I don't think there's any catalyst this week, to be honest, for Palantir. So we'll see what happens with Palantir at 15 bucks. Nvidia has earnings. They are $404. They are $4 away from falling below 400. The last time we saw Nvidia below 400, I believe, was in April. So Nvidia falling below 400 is going to be very interesting. On Finance Junkies last night, we were talking about how AI compute demand might not be exactly where we thought it was. And if that is the case, it's not that NVIDIA's quarter is going to be bad. It's that their guidance might be bad because SMCI's guidance was bad. AMD's guidance was bad, which means if all the guidances are bad, NVIDIA's coming down. NVIDIA's not going to stay up. And if NVIDIA's not going to stay up, well, that means that a lot of these other AI stocks are going to fall. I mean, if NVIDIA falls, Palantir's falling, C3's falling, it's just going to happen. And so it's going to be very interesting to see what happens in NVIDIA. Hopefully their earnings are not the worst earnings come August 23rd. Tesla at 234. We got to talk about Tesla down 3% today. It's down I think 5% since overnight. Look, the issue with Tesla is that they're doing more price cuts. Now, in the short term, this is a good idea because if all you have to do to compete with competition is reduce your prices, that's totally fine. You don't have to do insane amounts of advertising. You don't have to build a whole new car. You don't have to, talk shit about your competitors. All you have to do is, decrease your prices because your car is that good that people will pick you over the competitors. The problem is this will create more short-term pressure on the margins, which means earnings in Q3 are probably not going to be as good as they were in Q2 if prices are going down. I don't know the exact details on which prices got cut. I'm going to pull that up in a second. I'll pull up that tweet. But that is the reason the stock is down. Investors are not happy with them having to cut prices. People are saying, is this a demand problem for Tesla? It could be, because at the end of the day, if you have to reduce prices, that means that your demand or your current product is not good enough to be able to hold up with the market. So that is true. But if you reduce prices and you instantly get people buying you over the competitor, it means it's not really a demand problem. It's more so a consumer macroeconomic problem in terms of they're going to pick the cheapest option and they don't care that much if it's Tesla versus BYD. And so obviously Tesla still wants to be that choice regardless of whoever the consumer decides to pick. Duolingo at 136, Google at 130, Amazon at 138. Amazon is not giving up its earnings gains. It's down just a little bit from when it was when it popped on earnings, but it went from 128 to 143, now at 138. So Amazon and Google at 130, maintaining their earnings gains. They have not dropped the pop from earnings, which is so interesting because almost every other company has. Disney is down from $90 to $88 right now. We got Hims at $7.11, Celsius at $176, SMCI flat for the day at $256, but green just a little bit. TFC $31.26 on the regionals. NASDAQ, look at that, 13,603. We are seeing a downward spiral in the NASDAQ. Robinhood at $10.64, Shopify 54, Unity at 35.46. What I'm seeing with small caps and mid caps basically coming down, and then we'll check on oil in a second, is basically the idea that the market thinks inflation is stickier than what is expected. We are not going to get to 2% or anywhere close to 2% by the end of the year. And so they want to find safety in cyclicals or in big cap tech, which is why Apple, even though it's green, is barely green, but some money is rotating into Apple. If that's the case, if you have growth names, it's going to suck over the next couple months unless we actually get the corresponding inflation data we need for the Fed to be able to officially say we are done hiking. And if that happens, that's a major catalyst. And then we just have to wait for the first rate cut. Until that happens, until that string of events becomes legitimate, it's going to be tough owning some of these growth names because they're just not going to get the love, especially if Q3 earnings doesn't go that well for them in the brand scheme of things. Will Enphase hit a 52 low? Let's actually check on Enphase. I forgot on Enphase. Enphase right now, 133. It's possible to hit a 52-week low. It would have to go below what, 130? 131, I think that was the low on Enphase. Yeah, we haven't seen the 120s in a long time on Enphase. Maybe we briefly touched 129, so it's going to be interesting on that. Let me pull up the CNBC clip around oil. I thought this was one of the most fantastic things I've seen in regards to actually laying out the case for why we're in a macroeconomic issue with oil and what impact that is going to have on inflation. So let's take a look at this and we'll analyze this as it goes.
Are likely to go up again in August, according to the IEA, as oil demand reached record levels in June globally. We were over 103 million barrels a day for the first time. And it comes as we're only producing less than 101 million barrels. And a big reason is because Saudi Arabia has tightened supply. Joining us now for more, Bob McNally is Rapidan Energy Group's founder and president and author of Crude Volatility, The History and the Future of Boom Bust Oil Prices. Bob, it's good to see you. So has the upward move largely behind us now? It looks like we're kind of settling out here in the 80s. And at some point, if we head upwards of 90, wouldn't Saudi respond with some production and take advantage of those prices?
Hi, Kelly. I think we're in, as we discussed a couple weeks ago, a bullish move here. We think oil prices, crude heading well into the $90 range, 100 entirely possible on a daily print before the year.
Boom. So well into the $90 range, and $100 he feels is very possible. And his logic for why that's going to happen, I think, was actually really good. By the way, Palantir now is under $15.
Out, but it'll be choppy. Oil prices are climbing a wall of doubt and skepticism. Traders were head faked by the lack of the Russian disruption last year that sent crude to 130. And there are plenty of macroeconomic risks. We're dancing in a macro minefield now with every rate hike and so forth. So there are good reasons to be skeptical. Traders are not buying into it, but fundamentals are fundamentals. OPEC Plus is going to put a huge deficit into the market in the second half. We're starting to see that, and that should send prices higher. And I don't think the Saudis back off at 90 or 92. I don't think they have a price target in mind. I think they want to be sure that the deficits they hope to create are materializing before our eyes before they.
So right there, his view is that the Saudis could give a crap about the United States and our oil demand. They want to get prices up to 90, even 100 in order for them to fulfill whatever political agendas they have. And that's not good for Biden. I mean, going into an election year, I can't imagine oil prices go back into that $4 range. Remember, they were there for about 3 months, 430, 450, 465, 493. I remember I was paying at one point. I would imagine Biden does not want that going into 2024. And if he does, we are getting a Republican in office if oil is back at 494.
They decide that to take the foot off the brake there.
Sure. And I mean, I understand that. But, so let's kind of back up for a second. We are running a 2 million barrel a day, if not more, deficit. So to fill that gap, everyone's running down their crude stocks. We talked about this with Amrita Sen last week. We had an 8 million barrel draw here. She thinks we'll probably run out of our excess inventories by the end of the year, leaving 2024 more vulnerable to oil price swings or upward shocks, which I don't think the president would want. So what are the choices and options here?
Well, president doesn't have very good options. They range between inconsequential and then disastrous, really bad and counterproductive. That's the gambit. Unfortunately, I know I worked for President Bush. I've been in those shoes. But there's just no magic wand. The DOE SPR draws were his main response last year, but I don't think DOE wants to do any more. They stopped the refilling, but I don't think they'd agree to another draw. However, if the White House...
So what he's saying is that last year, to calm the oil stuff, they got oil from the SPR as the strategic oil reserves, but he thinks that the DOD won't allow that again, which I agree. We haven't even refilled the strategic oil reserves, so it's not like we're going to be able to just take barrels from that and put them into the market in order to reduce price.
Wants it, the White House gets it, Kelly. If we go to $4 gasoline, can't rule out more SPR draws. Other than that, ease up on Venezuela with sanctions a little bit. Maybe a wink and nod to Iran, let them export a little bit more as part of this hostages for cash deal. You can get some dribs and drabs there, but there really aren't any good options. The best option he would have is to convince Saudi Arabia to ramp up production. And there's this bigger negotiation underway that's been reported between the Biden administration and the Saudis. That's not going to come to fruition anytime soon. I don't expect it to change Saudi policy, but that's probably the best option the president has right now.
So I'd actually...
So in that regard, oil's, it's a tough situation we have right now with oil, and I don't think it's necessarily going to get better anytime soon unless we see some material changes. But that is a huge, huge thing to look out for, because for all the people that thought oil was going to normalize, it doesn't seem like that's happening yet. And that is one thing I think we definitely have to be concerned about a little bit. Enphase at 133. Palantir got back. See, every time Palantir falls below 15, it gets eaten up. So right now it's at 15.16, 15.19. So, it goes below 14 for a second, and then the dip gets bought almost instantaneously. I don't know if that's retail, that's institutions, whatever it is, but it can't seem to find a floor below 14. Now, the catalyst to get Palantir back to $12 is I genuinely think NVIDIA shitting the bed. I think if NVIDIA does not show the earnings that the market wants to see, NVIDIA's bringing the market down. I really believe that, because at the end of the day, a lot of this market is still propped up on AI demand. And so if we're propped up on AI demand, and even if it's artificial, like Palantir has nothing to do with like LLMs and implementing them, to the best of my knowledge, is not positively correlated, at least within every enterprise, with GPUs. Like I don't, well, I could be wrong on this. I don't know if Cisco, if they want to implement AIP, needs a shit ton of GPUs to be able to train their LLMs. Maybe they do, but not to the point where like it would create that much more demand. I could be totally wrong here, but I don't think that's the case, which means a lot of the Palantir hype and C3 AI and all these other companies hype from AI that came from NVIDIA really didn't matter. It just meant institutions wanted exposure to AI because NVIDIA, they kind of missed the rally. If NVIDIA comes back down, the exposure to AI in these secondary and tertiary players like Palantir, C3, etc., that doesn't seem to matter anymore, right? They'll just go back into NVIDIA. So it's going to be interesting to kind of see how it play. Now, the bull case of this is that NVIDIA crushes earnings, guidance is great, demand is amazing, and the market continues to say that NVIDIA is a $545 stock. I think that's what some banks have it rated as. And NVIDIA continues to keep doing well. So we will see. Jeremy says Carp's using some of the billion and buying the dip below 15. Oh my God. $5.29 gas in California. That's insane, bro. That's ridiculous. That is crazy. Blake says, do I have a fan on my face? No, I just have majestic hair flowing because that's just how I am. I am majestic. No, I'm just kidding. Yeah, my for those that are new to the market stream or missed the first 10 minutes, the air in my gas. What am I saying? The AC. I'm talking about oil and gas, and the AC in our house broke. And so yesterday, bro, it was hard to sleep. It was like a sauna in my room. So yeah, I have a fan on, and thankfully you guys can't hear it because the mic is farther away. But yeah, there's a fan constantly on my face now. Amit, when are you buying Tesla after interviewing Dan Ives about his bullish case? Dan Ives did not do anything to change my perspective on Tesla. Look, I don't like Tesla above 200, man. If Tesla was at 160 this year and I'm buying it at 230, that's not cool. Especially in this macroeconomic environment, 230 doesn't seem as attractive. Just like Palantir at 15 doesn't seem that attractive given this macro environment. Palantir at 20 didn't seem that attractive. And, that is one thing I will continue to say. I was on the record, God knows how many streams, I was saying Palantir at 18, 19, 20, do not fucking buy it. Like, it's too pricey for the growth. And I had a feeling the growth was only going to be 13%, 14%. It was not going to be 30%. You cannot have a $40 billion company trading at 20 times price to sales at a 13% growth rate. It's just not possible. Now, did I sell my Palantir at 20? No, because I'm not trying to trade in and out, even though I was pretty confident that it was overvalued, but I didn't want to sell it because I'm not a trader, right? As much as people want to say I'm a trader because I have some options, I actually do want to hold Palantir for a very long time. And so if it goes below 15, I will just buy the dip. I will load up. So below 15 is my price targets for when I lower my average on Palantir. It's pretty simple. Tesla at 233, even though I think it's cheap, I don't like it at 233 given this macroeconomic environment. I mean, the fact that they have to cut their prices, margins are going to suck next quarter, and that's not going to be good for the stock. That's definitely not going to be good for the stock. Not going under 200 again. Blake, be careful what you say, man. You were at 290. You were telling me to buy. You got to be really careful what you say. Because I remember all those comments at 270, 290. Admit you missed out. You got to get back in. Well, we're not in the best macroeconomic situation for things to just like not have an issue. Like things can be tough. Enphase now at 132, new 52-week low on Enphase. This is a bloody day. I mean, just looking at my portfolio right now, we are red. We are red. I'm sure other people are feeling this as well. Robinhood's down, SoFi's down, TFC at $30, $30.90. Obviously, I have a very big options position on TFC. See, this is how crazy it is on TFC. I bought the option so cheap, I am still up money on like I'm still up on TFC on my options, even though the volatility this past week has been insane. So, TFC would have to fall a lot more in order for me to be down. But look, here's the thing. I think some of these prices are stupid, and I don't think we head that much lower from some of these prices. Like SoFi at 846, could fall to 7, yes, but that's stupid, right? Like Meta 299, I think it's kind of stupid given their earnings were phenomenal, but could we fall to 240? Yes, that's possible. TFC at 30 is absolutely ridiculous. There's a fucking 7% dividend. Like, does it go back to 27? Maybe 2016 lows, I guess, but I think it's hard to justify that. So some of these prices, same thing with Robinhood, right? If Robinhood gets to $9, it's basically trading on cash. And so some of these prices are so dumb that I feel like what's going to happen is they're going to do what we saw in May, which the prices got so stupid that they had nowhere to go other than up, right? It was way better to put your money here at Robinhood at $8-9 versus in a money market fund. And so we might get to that point again if things get dumb on the S&P. But look, 420 on the S&P is absolutely in the play, and we should want that because that's a correction that's needed for the market to actually be able to stabilize and make the next leg up. So, I welcome it, and I'm not too afraid of it. It's going to suck looking at the portfolio, but if it happens, it happens. And we'll go from there. Sold some $27.50 puts on TFC. That's possible. Palantir to 10. It could happen. Palantir could go right back to 10. Tesla to 180. Look, if the S&P goes to 420, you bet your ass Palantir could be at 10 and Tesla could be at 180. Absolutely, that could happen. What's a good market cap entry for Enphase? So I think this answer can be answered in two ways. If you're looking at the technicals, they have a gap to fill at 117. That's at least what Vitalik tells me. So technically, you might want to wait till 117. Now, granted, we may never get there, or we might get there. The qualitative analysis is that interest rates are still high, and if interest rates are high, Enphase is going to suck. So until we get clarity from the Fed on cutting interest rates, Enphase is not going to be in a good situation. Now, if you're a long-term DCAer, I think an $18 billion market cap is stupid, and that's totally fine if you don't want to worry about it. But if you actually do want to get a really good price, then you would want to look at the technicals with the gap we have at 117. And then you also want to look at essentially the Fed to do a switch. And the Fed is not signaling they're doing a switch anytime soon at all, especially with inflation and gas prices. So Enphase might not be the easiest buy right now. Palantir should just take 1 month and be in 12 to 14 range so we buy more. Yeah, I think that absolutely could happen. And look, I'm not like, if you're not selling Palantir at $20, if you didn't take any profits, why are you upset if it goes to $12? You get, if your thesis has not changed on the company, if it's only gotten better, you get to reinforce your position and get a fuck ton more shares at $12. So, to me, it's not a big deal at all. Vitalik, he's selling TFC soon. Folks at a loss. Again, this is the beautiful thing about having options for 2025. I really do want to see these play out. And look, if TFC and some of these options don't work out by July 2025-ish, August, then I'm out. Or sorry, 2024, because theta decay on Leap starts to hit around 90 days out from the expiration date. So I'll be out about 120 to 150 days before theta decay really starts to put a dent into the options. And that'll be around August 2024. By August 2024, I think we should get at least one rate cut. If we get one rate cut, most of these option positions are going to do very well, if not really well. I mean, again, SoFi has to be $15 for me to do really well. TFC has to be 45. A lot of these things can happen. PayPal has to be 85. So we'll see. I mean, if the next 10 months shits the bed, then it shits the bed. But if not, we'll hopefully get out of these alive, and we'll see where it goes from there. Let's see what else we got. Have you taken a look at SE stock? As this is a Kathy one, right? Didn't Kathy have C Limited? I actually have not looked at these guys in a long time. How have they done? $55. I think she sold out of them a while ago, right? At least that's what I remember. Yeah, this is what happened. She went all the way up 2021, and then she started selling on the way down. I could be wrong about this, but I haven't looked at C Limited in a while. I have to do some more DD on them. Okay, let's take another look at the markets and see what we've got going on a little bit. So we looked at oil prices. Let's take a look at another clip that I saw this morning that I also thought was really interesting in the context of the markets. This is, again, a little bit more of a bearish clip, but it's important we see the bear side on a red day so we can cry even more. Here we go.
We'll get some more insights on the consumer this week with a busy docket of retail earnings and the latest retail sales report, housing.
And that's true. We have TJX, Walmart, Home Depot, Ross, Tapestry. We have a bunch of good retail earnings today in this week that's going to let us know how the consumer is thinking.
Starts and minutes from the most recent Fed meeting. Got a lot on tap. Joining us now to talk more about it, Ashish Shah is Chief Investment Officer of Public Investing at Goldman Sachs Asset Management. What is public investing?
Public markets.
Okay. I wasn't sure if it was, the government or so. Got it. Okay. So you do it all. You cover it all.
Stocks and bonds.
What do you think then about the relative value in stocks versus bonds right now?
Look, I think both are offering kind of interesting opportunities, but given the market is priced out kind of this very benign soft landing scenario, the risk return is not looking as good as it did 3-4 months ago.
So you're in kind of the Barry Bannister camp and all that. We were talking to him earlier this morning. He's just kind of saying the same thing. The upside seems a little bit more capped from here.
Yeah, well, and you're going to continue to go and deliver decent returns because the economy's, it's not falling off a cliff here. I think the thing you have to worry about is concentration that's developing in your portfolio.
Sure. If you own the names that are the Magnificent Seven and all of that, time to rotate. So what about bonds? Are these the ones that, if everyone's talking, who was it just a moment ago? Oh, right. We were talking about gas and oil prices. And our guest from Rapidan, Bob McNally, said, look, the Saudis are continuing to keep supply in check because they're worried that this could be 2008. We wake up tomorrow and oil's at 40. If there's even the possibility of that, why shouldn't someone in their portfolio have a bond, a 30-year, a 10-year, a 5, a 2, whatever it is, yielding what it is against the possibility that we could see a material slowdown in the economy?
So Kelly, I love the fact that you love bonds, and I can't agree with you more that like these types of yields are really interesting. I think the question is, which part of the curve do you want to be in? Because 30-year, you can make a strong argument. Joe, you were making it before of we could be at 8%. A lot of things would have to happen between here and there.
I don't say we're going there, but at least at 8%, I'll double my money in 9 years? 4%, rule of 72.
Yeah.
But
I'm not trying to double
she sleeps with her
I'm
light.
not trying to double
She
my
sleeps
money.
with her light on. And her-
4% guarantee.
You heard of a stock called Nvidia or Apple or?
Nvidia is down like $80 from its
I
recent.
know, but Netflix. I mean,
This host is like really interesting. The way she analyzes stocks. I've seen her many times, and she's just like, "Oh, well, the stock's down," and I'm just like, "How the fuck are you on CNBC and that's your analysis?" Well, Nvidia's down. It's like he's talking about over 30 years. Like, like what are you talking about? Why? How is that even okay?
find a business you like. Find a business you like.
A lot of us have
reasonably priced stock and invest for the long
entire
term.
401ks are in the stock market.
Okay, if for money that you need to have, go ahead.
Yeah.
And you can
Well,
do that.
it's also for money that like you want to be able to invest when there is a dip, right? Your bonds are there.
Well, that's not a 30-year. I wouldn't do that on
But a
30
1
year.
year.
Okay.
I mean, the 30-year
It's
worked
better
pretty well
terms,
during the
right?
pandemic, right? Like it was the one thing that worked for you
Watching
in your
Paint
portfolio.
You should have. I could have bought 13.5% triple tax-free AAA bonds.
Wow.
That's what
No
you
regrets?
could. No one bought it. All my clients wanted to buy floating rate because they thought it was going even.
Well, here's the thing: they all matured. Now, what are you doing?
They all got called before they matured. Exactly. I don't know. Maybe how about a convert? How about
Yeah, I agree with Joe. I agree with Vitaly here as well. Find a business you like. The old white guy is correct. Find a business you like. I mean, that was ridiculous. She's like, I'm going to get a 30-year bond over NVIDIA. And he's like, why? He's like, well, NVIDIA's down $80. I'm like, what? This is the people they let on CNBC? I should be on fucking CNBC. I can say, NVIDIA's down $80. So, a 30-year bond at 4%. That's like, let's forget about everything going on. Palantir's green. $15.45. See, some things, look how much red is on the left-hand side of my screen. And then you got Palantir at green. This is also one of the things I was talking about over the past couple of weeks, which is that now that the market's getting used to Palantir, it can go below, but it's getting to a point where the dip gets eaten up. I mean, we haven't really seen that at SoFi yet, maybe SoFi at $8, developing a little bit of that range, but Palantir is, like the last time Palantir was meaningfully below 15 in that 1380, I think it was almost a month ago, maybe a month and a half ago. And so I want it under 15 because I want my average to get lower. I actually would not mind at all. If the world's bleeding, at least let my favorite stock bleed with it, and so I can accumulate more. But I don't know. I mean, there might be some more dip buyers than we think, especially institutionals that have missed the rally and want to get in. I don't think there was anything in the Palantir thesis that necessarily made institutions more bullish, in the quarter, other than the fact that they have 400 clients lined up for AIP. If you're an institution and you really think that that's a massive potential, then maybe that's where you get a little bit more. It was under 15 today. Yeah, I mean understaying under 15. Like it touches 1496 for like 2 seconds and then it goes away. Let me pull up this tweet by Palantir Vision on Twitter. He summarized Bank of America's equity report on Palantir's earnings. We'll take a real quick look at this one and then we'll be done for today. By the way, thank you 574 people for being here. Have a great Monday. Hope you enjoy your Monday and you kill it this week. So this is what the Bank of America equity research point on Palantir said. 2023 EPS update, they adjusted EPS of 5 cents is on par. GAAP profitability is good. Performance highlights double-digit growth witnessed across sectors. Commercial up 10%. U.S. sales are whopping up 20%. Government up 15%. Impressive 31% year-over-year growth in international revenues. This I'm going to make a video more on the international growth in government. I'm trying to figure out what clients are paying them. Expanding client base, their customer count has surged 38% year-over-year. U.S. customer growth has increased 35% year-over-year. That might be a thesis maker versus breaker for some of the institutions that missed the Palantir run up from 7 to 15. AIP update, CEO Karp mentioned AIP is now in 100 organizations and they're talking with 300 more enterprises. Again, that's big. 400 companies paying you just $2 million a year, 800 million in ARR. Some of these companies are going to be paying 10 million, 20 million. I mean, there's going to be some monetization that happens there. We just have to see when it happens. Guidance is raised, focus on profitability. We're going to be in the S&P 500, $1 billion share repurchase plan, good signal to the market. Their pricing target of $18 is derived from a 0.7x EV to sales to growth multiple for 2024. This considers a 0.6x on government multiple and a 0.08x on commercial. So if you take the average of those, you get to 0.7, and they maintain their $18 buy rating for Palantir. The downside risks are slower AI market growth, quick commoditization, competitors, advancements, government resistance to commercial solutions, upside potential, greater market penetration, more profitability, successful collaborations, AI platform market booming more than anticipated. So, look, Bank of America was good. Dan Ives maintains his $25 buy target on Palantir. So overall, hopefully it's not too bad for Palantir. Okay, that is it for monthly options. Expired this Friday. I could see a bounce this week and then a bigger dip going into September. Yeah, that's a good point. That is a good point as well. That is a good point. I forgot that they're expiring. And in September, the 2026 options open up. So we might see a little bit more volatility there in terms of people buying those up. Last thing I had to do for today that I didn't do because we got the PayPal CEO immediately. Well, actually, two things. Number one, I have to share this quick video for everyone that's been complaining about the bricks in my wall being fake. I went outside yesterday just to prove to you all that you are incorrect. So let me just show you this quick 40-second video so that everyone knows that the bricks in behind me are real. We're going to start this Monday off in the correct way, showing that I'm not a liar. So let's just play this, and we'll keep going from there.
A lot of people don't believe the bricks in my room on the background of my YouTube videos are real. And it's always very hilarious to me why people think this, because this is the exact spot where I grabbed the bricks from. I'm going to prove to you right now that the bricks are real. I came here 2 years ago and just took the bricks. As you can see, these are real bricks, and there's a gap. That gap is where I took the bricks to put in my room, and then there's the rest of the brick. It's very simple. So I think it's just, people.
It's very simple. Look, it's not that complicated, okay? People are like, the bricks are fake. I'm showing you I took the bricks. You know how markets have to fill a gap? I filled the gap I got the gap from the fill. The bricks are real, okay? The bricks are real. Last thing, asunder. Word of the day, asunder. Asunder is most often used as an adverb, often with a verb such as tear or pull, to mean to pull apart. The park was torn asunder by yesterday's microburst. This is the word of the day. Make sure you use it. It is important for us to learn more vocabulary so we don't sound like 3-year-olds. Asunder. The market is being ripped to asunder today, and my portfolio is down very badly. Hopefully tomorrow it's better. All right, that's it for me. Have a great day. Remember, you are alive. We are on planet Earth. The odds of you being a human were, in some of the studies that I've seen, 400 trillion to 1. You are here. Someone's sperm hit someone's egg. You are now here, no matter how old you are. So make sure you enjoy the day. It's a Monday. Go get some coffee, get a good drink, and let's get some shit done. Thank you, everybody, for joining. We'll see you on Finance Junkies tonight. See you then. Have a good one.